we can all read a few things, right? So you want to understand the x-axis and the y-axis. Now the x-axis here, it says 1345, which translates to 9:45 EST. Now at 9:45 EST, you are interested because the market is open, the market is in session, right? So ES futures, NASDAQ, they open at 9:30 Eastern. So between 9:30 and let's say 11, maybe 11:30 max, you're interested in what the market's doing at this price, at this area. Now once you know what to read, now again, this is very important because a lot of people think they can read the market without reading it, right? Or they can read the market by looking at candles, which is not the case, right? It's just not the case. It's not viable to do that. You want to understand volume. You want to understand delta and aggression, right? So delta and aggression kind of mean the same thing. When you have a negative delta, it means sellers are being aggressive. When you have a positive delta, buyers are being aggressive. So you can call them buy volume, sell volume, delta, aggression, you know. So going over here, for example, if you look at this candle, right, what you can see here, just by looking at this candle, what you can see is the bars are greater at the top than they are at the bottom, right? You can see that at the bottom there's sort of that lowish volume. Here there's higher volume. Now what you want to understand is once you have your key level, so I often get a question, how do you find your key levels? So I've been through them, right? I've gone through this over here, for example. So I've told you that, I mean, the levels that I find, they come from 15-minute FVGs. And then I'm just looking to take the candle before. This is very important. I'll just write B. Take the candle before and drag the zone over. So a visual representation looks like this. Find the candle before, drag it over. And you want to start looking at the order flow inside of this key level. K level, right? KL, sorry. So once you've got that, you then want to focus on the rejections. So, you know, more importantly, you want to understand why this is a key level, because going into Monday, right, going into April, this is going to serve as a key level. So ES, if you're an ES trader, you want to look at 64.90 to 65.18, 65.20. And you want to ask yourself, why is this a key level? So this is the question I get. How do you find your key levels? Or the better question is, why is this a key level? And so I'm going to keep the answers up on the screen so you can kind of understand this in real time. So I've just shown you we're at a 15-minute imbalance, right? Or a 15-minute fair value gap / imbalance. And we choose the candle before. That's important to understand. So we choose the candle before. Now, by choosing the candle before, you're giving yourself a better chance of catching these entries, or at least understanding how they work. Here, okay? But in order for us to make a key level, in order for us to understand why it's a key level, we need to follow the order flow model, right? Or we need to follow order flow. Now, order flow specifically I've broken down is this. Right, so now we're on the read part. So we want to read, right? Specifically, what are we reading? Delta, volume, bid and ask. So what we can see here is a lot of positive delta, a lot of blue delta. So this blue delta here, what does it mean? Well, the blue delta just means that buyers are aggressive. So we look at delta, which shows us aggression. Who is being more aggressive? So on the x-axis, we can see here 9:45. Now the y-axis is more important because this was our key level. So 64, let's call it 90 to 64.95. So obviously our level's a bit bigger than that, right? Our level's all the way up here, but we're focusing on the rejections off that level to the downside because we're in a bearish market for S&P 500. And so what does the R mean? You have to read this if you want to trade the lower time frames. If you're a day trader, you cannot get away in 2026 without at least understanding what the delta is, right? There's no two ways about it, right? Those who trade without order flow end up being the exit liquidity for those who do, right? Those who trade, I'll say it again, those who trade or those who choose to trade without order flow end up becoming the exit liquidity for those who do. Because when you trade with order flow, you are trading what the markets are doing, not what you think they should do. And it's a very big difference to It's a very different way of looking at the market, right? The market leaves clues on what it wants to do, what it is doing, and what it could potentially do. That's where key levels come into it. Because when price leaves a key level, I'm going to show you at the end how this develops. When price leaves a key level, and you can actually see why it's a key level, and you know where the key level is because you can prove it with the order flow, not you thinking it bounced off here or you thinking it rejected there. No. If you can prove almost mathematically, if you can decode what the market's doing through footprint charts, charts, you can begin to understand and dissect where those key levels are. And when you can dissect where those key levels are, your trading becomes simpler and more streamlined, right? Because you actually know, I will only take a trade above or below this level if we get there. All right, so that's what you want to kind of understand. So if we go to our acronym over here,